What is up, UK Property School? Rob here with another education video, and this time it is the age-old question: when starting out in property investing, should I do it through a limited company or my own personal name? So there are two ways that you can buy property in the UK. You can buy it as a person, aka me, Rob, or you can buy it in a company, aka Rob's Company Limited. The main factor for consideration when you're deciding between the two is that in 2015, a tax rule known as Section 24 changed how individual landlords in the UK pay tax. Investors with property in their personal name can no longer deduct 100% of their mortgage interest from their rental income before calculating tax. This means that they're paying tax on turnover, not on profit. So aka the full gross rental income rather than the net profit after their mortgage costs. Higher rate taxpayers, that often means a higher tax bill because they're taxed on a larger portion of the entirety of the rental intake. But also it becomes a larger amount that now gets classed as income. So your profit actually looks higher on paper, and that can push you into a higher income tax bracket, meaning yet again, more tax. Now, these rules generally do not apply to limited companies, which can still deduct mortgage interest as a full business expense. Company profits are subject to corporation tax, which is typically 19 to 25%. And for higher rate taxpayers, that is significantly lower than the personal income tax rate. It's also easier to reinvest because rather than having the rental income come directly to you for tax, it comes to your company first. And you can keep the profits within the company to fund future property purchases rather than taking them out. And this means that you haven't crystallized the profit and you can reinvest without paying personal income tax on that money. In addition, there are also some benefits to using a limited company when it comes to succession planning and inheritance. It's often simpler to transfer the company shares to family members rather than try to transfer the physical property titles. So because of all these factors, most investors since 2015, when all these changes happened, have set themselves up to invest through a limited company rather than personal name. Many investors who are in property prior to 2015 have also looked to transfer properties into a limited company, but this can be expensive to do because it can have capital gains implications and stamp duty implications. So you're better to set up the correct way initially rather than try and U-turn. There are some drawbacks to a limited company, but in general, the consensus is that the pros outweigh the cons on that. But in the interest of a full picture, here they are. So buy-to-let mortgages for limited companies often come with higher mortgage interest rates and higher fees than personal name mortgages. Although on that point, since 2015 when all of this started, the gap between those two products has progressively gotten smaller and smaller. So really there's not that much in it anymore. And so if you want to take profits out for personal use, you could be taxed twice. So once at a company level for corporation tax, and then again when you withdraw money as dividends or a salary. However, again, when you send money to your company to buy a property in the first instance, most people do that as a director's loan. So the company technically owes you that money back before any tax is due. And you can also charge your company interest on that loan as well. With a limited company, you also have to file annual accounts with Companies House and corporation tax returns with HMRC. So that means usually hiring an accountant, so there is some additional cost to that as well. There you have it. That is the difference between limited company and personal name investing. Just remember, I can't give financial advice. This is just an overview for information. Everyone's individual circumstances will be different, so always get independent financial advice from a qualified accountant to make sure that it is bespoke for your own situation. If anyone has any questions, drop them in a post or a comment, tag me in it. I'll be happy to expand on anything that anyone's not sure of. Hope you guys are enjoying UK Property School. I'll see you